We're almost back to that 50-day moving average for the S&P 500. So, headlines drive a lot of the action right now, but earnings season is also a big point of this whole thing. Mag 7, very much a focus, right? They've taken a beating so far this year, but Meta Platforms has managed to fare the best on a relative basis, and our next guest sees some trading opportunities with the social media giant on deck as it gears up to release earnings after tomorrow's closing bell. So joining us now is Bob Lang, the founder and chief options analyst over at Explosive Options. And Bob, the Meta Platforms trade is an interesting one because there is a possible catch-up scenario that's maybe even developing. Nobody knows the future, but there are certainly traders like yourself who are wondering whether there is optimism to be had with an earnings catalyst. What do you think, and how are you playing it?
Well, good to be with you, Dom and Kelly. But really, basically, what I'm seeing here is a chance for Meta to get back to the medium March highs. Let's call it about $630. That would be a really nice move from where the stock is currently at in the 540s, 550s. But certainly, the thing about the options right now are that they're exploding higher in terms of implied volatility. So the expected move, Dom, is about $48 for Meta tomorrow. That would be up or down. That's about 8%, which is quite a bit higher than what we normally see. 6 to 7% is the normal move post earnings. So that's a big move. So the expectations are there. The anticipation for a big move is also there as well.
And now this is interesting as well because for some of the bigger tech names that have reported so far, there haven't been that many, but the ones who have actually been less volatile than they have been over the last 8 quarters or so. So this is different. How then exactly do you play it, and what makes you think that the upside is there, and how would you express that in a trade?
Well, I think the upside is there, obviously, with that target of 630 sitting out there. But I would look at maybe taking an at-the-money or a slightly out-of-the-money option. Now, options are going to be very expensive. Now, if you take a look at something that's right at the money, maybe a 560 call for out to May, you're looking at something that's priced at about 5% of the stock. That is rather expensive. So what we could do, Dom, is we could take the front month, which is this Friday's option, sell the 600 call against it, and reduce our cost for the 560 call by about 25%. So if the stock doesn't make that move up towards 600, then that option for this week is going to expire worthless, and we're going to have just a lower cost on an option that has about 2 weeks left in time.
All right, so Bob Lang with the trade on Meta Platforms looking for upside. Thank you very much, Bob. We'll see you again soon. Thank you.